Bitcoin is back in the low 60,000s. The market is bleeding. There's starting to be a lot more fear in the market. So let's take a look at the charts. Let's see what these charts reveal to us for the future. Is the bull market over? Are we going a lot lower? Or is this the usual corrective period from May to August that we typically see in preparation for a leg much higher towards the end of the year? Guys, if you enjoy these updates, I'd appreciate it if you smash the like button. It does help the video get out to more people. And if you want to get more of these updates, just make sure to subscribe to my channel on YouTube, follow my page on Instagram, and that way you will see more of these updates when I do them. All right, so as you can see over here, Bitcoin is trading at 62,600. That is quite a way down from the 74,000 that we saw a couple months ago. Now, what is really important and really key, in my opinion here, is this 3-day chart. So what this means is that every candle on this chart represents 3 days worth of price action. Then what we have here is the 50 simple moving average in blue. And this is very important because, as you can see, this is a very good indicator of whether we are in a high time frame bullish or bearish trend. Now, as you can see over here, this was in 2020. For the whole duration of the bull market, the price stayed above this 3-day 50 moving average. The same thing here. This is how I was able to say back in January 2023 that we were back in a bull market and that we were potentially going a lot higher, which is exactly what happened. We reclaimed the 3-day 50 moving average and stayed above it. We retested it here, retested it here. This was a bit of a fake out over here for quite a period, by the way. That was from August all the way up to October. So for 2 months, kind of stayed below there, hinting that potentially it could go down. We reclaimed it over here. That was another sign to get long. And we've stayed above it from October all the way till now. And as you can see, right now, we are sitting exactly on this 3-day 50 moving average. And this is a very important support to hold because, as you can see, when we lose it, here in May of 2021, we dropped from 46,000 all the way to 29,000. And when we lost it again in November 2021, we basically dropped from 50,000, started the bear market, and went all the way to 16,000, right? So that was a massive drop. So my rule for using this as a bear bull directional indicator is that we need 2 consecutive closes across the MA to be able to get that confirmation. And the reason for that is simple. Sometimes it gives a bit of a fake out, like you can see over here, where it does seem like it's closing above it, but it didn't get 2 consecutive closes above, and that would have just saved us the fake out scenario where it seems like it's crossing it, but it is not. Okay, so in this case, we are above it. If we get 2 consecutive closes below this moving average, which is below 62.6, right? And 2 consecutive closes means 6 days worth of trading action, which means basically this whole week. So if we get 2 consecutive closes below it this week, then it starts to look bad and we have to potentially flip bearish until we reclaim it again, right? It's very possible that it could be a scenario like this where it got below it, spent some time trading, and once it reclaimed it, well, then we flip bullish again. So it is not an absolute thing where once it closes below it, we stay bearish for infinity. No, we stay bearish until we lose it again to the upside, and if it reclaims it again, then we can flip bullish. As you can see here, if you go and look at the data, at the history of how this moving average performs with the price action, then you will see there are not a lot of these crossovers of the moving average. It happens once a year, sometimes twice a year, but usually not very often. So when it happens, it's worth paying attention to. And if you go and look at the data, if you would have changed your bias to bearish once it lost it, a lot of the time it could have saved you a lot of money. It could have prevented you from taking longs when the trend was obviously clearly bearish, and it could have also saved you from adding spot positions when the trend was still bearish until it flipped it again and got bullish again. Okay, so this is just a high time frame indicator, and it's an important one, and we're going to find out very soon, probably within the next 1 to 2 weeks, if this area is going to hold here or not. And keep in mind, it's completely possible that somehow we start to bounce from here. Again, it can wick below here It can go to 60, it can go to 59. As long as we don't get 2 consecutive closes, a little bit of time below it is fine in the same way as it did over here, and then get a big bounce. So we are here observing this. If this does hold and we do see a big bounce, that could be great. That could be the potential start of bullish continuation. If we don't, if we lose it, then we have to consider maybe a scenario like 2021, which has been followed pretty closely, by the way. It peaked in April in 2021. We also kind of peaked here in April of 2024. And maybe it's not the worst thing if we do get a bit more of a drop, flush out all the greed and all the shit coins and all the craziness that's been happening, and then that sets us up for a potential move higher later in the year. So if we change this to the weekly chart, you can see what happened in 2021, and that might be very much a benchmark of what is going to happen. Now you can see the 50 simple moving average, the blue, it's still the same average, but now it's on the weekly time frame. And you can see this is currently sitting at about 47,000. And you can see what happened in 2021. We dropped exactly to that 50-week moving average. And that happened during the exact kind of same time. That started to drop in May, and it ended over here in about the end of July. And from July, August onwards, we had this massive rally until the end of the year that basically took Bitcoin from 30K all the way to 66K. So maybe it's a possibility. We're seeing the same thing. We're here, as I'm recording this, it's June 24th. So maybe we see more of a flush. Maybe we see this pullback to the 50-week moving average in the next month or two. And then we see a massive continuation rally into the end of the year. Keep in mind, it is also the election that's happening in the US at the end of the year. So it is completely possible that now, during the seasonal time, May, June, July, we see this corrective move. We get maximum fear. We flush out all the leverage. Everyone gets really, really scared. But the 50-week moving average holds. And as long as that holds, then we have a chance to bounce here, maybe end of July, maybe in August, and then a massive continuation to hopefully new highs and maybe even $100,000 by the end of the year. So that's basically the two scenarios that I'm watching right now. Either we hold this level of like 62 to 60,000 and we bounce from here, or we lose it, but we drop towards the 50-week moving average, we clear out everything, we form a base, and we continue higher, say August onwards, to potentially the end of the year. And again, the reason why I mainly show Bitcoin is because Bitcoin leads the way. If Bitcoin is going to trend lower, it is unlikely that altcoins are going to move higher by themselves in the opposite direction of Bitcoin. So if Bitcoin is going to drop to like 47,000, we can probably expect altcoins to go a little bit lower. Maybe they won't go as low because they've already taken a massive hit. But in general, if Bitcoin drops, we see altcoins drop a bit more. But that could also set you up potentially, if you are aware of this knowledge and it does play out this way, and we do drop to say about 47,000, something like that in the next couple of weeks, and we form a base to go up later in the year, that basically gives you your perfect entry spot at basically the best entry. Once it's dropped like that, altcoins will probably be also even lower than they are now, and that might set you up for the best potential risk reward upside later this year. So I think for now it is going to be key to see what happens this week, especially because we also get the monthly close at the end of this week, and I will obviously do an update on the first of the month to see how the monthly candle closed, because that always gives a bit more information whether that candle ends up being bearish or bullish. It gives us a little bit more information for the month that lies ahead. So let's see what we get. I'm still not too concerned, but we could potentially drop into the low 50s, high 40s if we lose the $60,000 level. And if that happens in the next couple of weeks, I do think that might be a good thing that sets us up for much higher, for a second leg up later in the year. So if you still have that risk capital, that would probably be a good place to wait for and to position yourself if that ends up happening and if it looks like it is building a base at that point in time. So let me know what you think in the comments. How do you feel about the market? What do you think is going to happen? I would love to hear. Drop a comment down below, and I'll see you in the next video.